Yep. What we're going to do right now is for me to take you through some basics of due diligence, the way we present it to our investors. That we will do later today, because it's the inverse of that. So for the startups, it helps you kind of prepare for what they will probably plan to do and want to do. And it will tell you something about how to navigate to avoid making the customer annoyed. Because in a way, and coming back to what you said and the questions and discussion here, investors are in a way buying and you are selling. So there is not an equal kind of partnership in it when you sit around the table. There are also startups that maneuver themselves into a position where all the investors have FOMO, fear of missing out, and there is a queue outside and people are begging to come in and invest at a ridiculous price. But that's not a normal situation, I can tell you. So basically, you're on the selling side, and investor is on the... You're selling and they are buying. So due diligence, what is it? Probably everybody has a kind of an understanding of what it is, but there are some definitions around. It's a comprehensive appraisal of business undertaken by a prospective buyer, the investor, especially to establish its assets, liabilities, and evaluate its commercial potential. All of these are relevant definitions from various groups in the investment community. And to the investors, we say that this is something you only do when you basically have decided that you want to invest. This is not something you do just to check out a company, or just because you have the time, or you take pleasure in in doing it. So when somebody asks for a due diligence, that means normally that he or she represents a group or an investor as in herself, or a group of investors. And because you cannot measure something without influencing it, right? You cannot, even if you fish and you catch a fish and your plan is to release the fish again, having measured it, having captured it, you have influenced the fish. So we don't want the investors to be a plague and a pest and take away your precious time. That's what we tell them. But we also tell them you should do this because you wouldn't buy a house, would you, without checking it, reading the prospect line, or at least checking what the broker has presented to you. You want to see that this house has been checked by somebody qualified to do it. You wouldn't hire a person, would you, without checking the background, having interviews, talking to references. It's the same thing here. You would check that what you as companies have presented during your pitches, during the investment deck presentation, and in meetings. Is it actual? Is it true? Not that you lie, but is it true when you really test it and bend it and see if it breaks? That's important. And also, and this goes for you as well, there could be more risks than just doing a bad deal, investing in the wrong company that didn't make it. You could put yourself as an investor, and you could as owners of a company, by taking in the wrong investors, being a possible liability for KYC. Everybody knows these. Know your customer directive. All of a sudden you have to know what this investor is. Who is he or she? What do they represent? Are they possible criminals or whatever, trying to whitewash anti-money laundering directives and stuff like that? Or is this company, this is again very actual, are they doing business with Iran? that which could put you and your company in a lot of problems with, for instance, the US and other countries that follow the US in this. And you have to find out, because these kind of sanctions hit back without any thought or reflections. You have broken a law, bang, here you are. One example that I've used is that because of this, we sold the company to the US 2 years ago, 70 shareholders. DNB in Norway refused to accept the money, the purchasing money from the purchaser in the US, because this money would make immediately all those 70 shareholders potential customers of DNB, and they didn't want to take that liability. So they refused to take the money. Think about that. So you are buying a company, the investors are buying a part of a company, so you should check what you buy, because if you're not, you're just buying stocks off the shelf. And that could be a good company. Quite often it's not, and you read about it in the papers. Somebody call you and say, you should buy, we have this wonderful opportunity for you in this and this company, this is this syndicate, you should buy it. Don't. Has something disappeared there? No. There are different situations, different schools of how you do, because that's what's missing. It's the how do we do it. Angel investing is different from private equity, different from merger and acquisitions, different from VC and major investment. It's a small investment, so it should involve low cost. Cost on the investor side, but also cost on you. You shouldn't accept lawyers and auditors marching in and turning your office upside down. That's not what it's about. But it's a short-time, do-it-yourself approach that we ask the investor groups to take. Use your own experience, your own network, free analytics, but also use LinkedIn, use Proof, Pure Help, Facebook, whatever you can, to find out, is this true? What kind of a company, what kind of people are these guys? We want the group to discuss among themselves, based on a template we provide, and decide what is important. If I want to know something more about a specific company, where are the possible holes? Where do I see risk that I don't understand yet? Where could a good DD help me reduce that risk and hence increase possible value? Then they will decide on that plan what to do when, and inform you. They will probably also ask you to provide references on yourself as a person, as a team. Maybe they will ask permission to talk to key vendors or early customers, stuff like that. But it's supposed to happen over a period of 2 weeks with reasonable workload on them and on you. That's the point. The DD report will belong to the investor group. This is important for you. It's nothing you automatically get hold of and can use to, if it's good, sell to other investors and invite other investors. It belongs to the investor group. It doesn't belong to Angel Challenge. It belongs to the group, the syndicate. And they decide what to do with it. And it will be full of disclaimers. Have you seen a DD report from PwC or KPMG or something? It's like 7 pages of disclaimers or something.
Yeah, a little bit more. I actually worked on those. So that could be like 20 pages, depending on the format.
Yeah, the report is 7 pages and the disclaimer is 22. So the management summary should be simple. It's an upfront recommendation with a conclusion, which says that based on what we found, there are no red flags, or there are this and this yellow flags, or it's totally green. So it's a yes, it's a no, because there is a showstopper there. That's normally not happening, because if there were any real bad red flags in one of the companies, we probably would have found out already. But you never know. Quite often it's a yes, but look more into this, and that's something you take into the discussions around valuation and term sheets and stuff. Yes, it is. It will follow the template, as we said, and again, it's owned by the investor group. So this is available, or will very shortly be available. It is available, yeah. If any of you has any previous experience, you will see that the template very much follows a standard from the European Business Angel Association. And again, the reason for that is that we are not here to invent new fancy ways of doing angel investments. We're here to educate investors and to make your company's investment ready, so that when an investment happened and you want to go on and you grow and you have success and you will do a seed round, the investors in the seed round will look at the document and say, recognize this. Seen stuff like this before. This is okay. That's the point. Corporate structure and ownership. This is relatively simple, but also important, because what kind of structure, that's normally, I think you have more or less the same structure, all of you. You don't have subsidiaries, but that happens quite often. All of a sudden, you have a Delaware Inc. And I mean, we have at least seen 25% of a typical VC, Norwegian VC portfolio. You will find Delaware Inc. subsidiaries of the companies. It's an easy way to enter the US and go global for your company. So what you have to see is that, has there been, when was this company started? Has there been any changes, renames, restarts, restructures, any recent major changes? Who are the shareholders on the cap table? You need to review them. If you don't know them personally, you have to find out, who are they actually, before you. So you should be able to present them, because you should know your shareholders. If you don't, you already have a problem. Their roles, their history, and stuff. Stuff like that is easily available on Pure Help and Prof and others, so people will find that. Don't try to hide anything, because then you, as a company, you lose all trust immediately, and people get scared. How many full-time, the board, the same with the board. Previous roles, company changes. Also, maybe the investor group would like to have a chat with the chairperson of the board, or another person in the board. You have to decide whether you would like that to happen, or accept that, or not. Maybe you would like to talk to that person first. But again, be transparent. Full-time employees, part-time employees, active owners, mentors, again, the investors should understand this. Are there an official kind of management here through a board of advisors or mentors who actually run the company? We've seen that a lot. Very strong mentors that have enormous influence over a company. We want to know. Again, any subsidiaries, any corporate owners, does Schibsted or whoever has a stake in the company? Not necessarily a problem, we just want to know. So that person X actually doesn't represent herself, but Schibsted or Aftenposten or whoever. Present and previous shareholder agreements, don't try to hide any of them. They should be available, easily available in the data room. Agreements between founders, that happens. That founder A and B have a personal side letter agreement between themselves. It's a bad thing if it's hidden. Articles of association, what do they say about the purpose of the company? Maybe not so important. But all of this should be available in the data room. And again, you don't let anybody into the data room unless you want them to, and unless they sign an NDA or something. I would never sign an NDA to listen to an investment presentation, but I do understand I have to sign an NDA to be allowed into a data room. But that should be organized already, as far as I understand. Shouldn't be a problem. Financial, recent accounts, profit and loss accounts, 3 years if possible. Maybe that's not relevant. Then the group will decide, the investor group will say, not applicable. You don't have that. We will not ask for it. Previous business plans / budgets, if possible. They are probably there as part of your normal operational procedures. Key revenue items moving forward. That is what Sarah did here, the unit economics thing. And also simulations, if possible. Very important is the cost base moving forward. You have to have full control over your cost base. You have to, and that's including miscellaneous. The 30% you don't really think will disappear, but they do. And they tend to disappear extremely quickly when there is new financing to the company, and the bootstrapping is over, and everybody, and all the bills come in. Travel and everything else. So that happens. But you also need to have in place your plan for expansion. You want, let's say, a larger sum. Some of you want 5 million or stuff to really grow. Then we would like to know, how are you growing? What's your plan? Who do you hire? I want to hire this and this and this kind of person. Okay, if you have this money on January 5th, who do you call on January 6th? What do you do? How do you make the best of that money? Or is that just, oh, I'll sit down and I'll see if I can get somebody to help me hire somebody? No. A better answer is, I will start calling this list. These are the 5 top employees I would like to have in my company. On the other side, these are the 5 people I can let go if I have to. Like, for instance, Kandolva had to let go 14 of her people in no isolation, not because she thought them bad employees, but she had to. So you should know that too. How do I bootstrap? Assets in the balance sheets, are they real? Or are they just hot air? Will they disappear if you change auditors, for instance? We will ask, are they tax related too? Which introduce kind of a political risk. Any debt in the company? If so, what kind of debt? And again, be transparent, because if all of a sudden there comes an investment into your company and out of the closet comes a bridge loan or whatever, you're in trouble. And not only in like, okay, this will not happen, maybe I'm in trouble or my business is in trouble, you are in trouble, personally. Possibly liable. All tax-related accounts in order. And again, the investors have to check. One of my partners almost, or he feared he would end up in jail. He was the chairperson of a company where the accountant was a periodic alcoholic. And he had several bad periods, one after the other. And for more than half a year, the accounts were just bullshit. They were just inventions. And when he sobered up, yeah. Insurances and pensions, okay, because you do have to have, some of these are mandatory. You have to have them. And again, this must be in the data loop. So, very short on the business plan and the competitive landscape. This is where the investors will kind of stop and re-evaluate all the assumptions around your company. Can it fly? Is it a good idea? Are the assumptions realistic? Are they reasonable? Are they tested? Is it a reasonable test? Is it a good test? Is it a solid test? Or is it just intuitive? Who did it? And who responded? But also something I like, and a very good learning from corporate Cisco, which are the 3 to 5 most important activities or actions that need to be accomplished in order to reach your first goals, the primary goals? What do you have to do? Not 6 or 60 or 70 small items, the 3 to 5 most important things you have to do. Are there any unique selling points? Or are you just improving on the already known process, already known product, service? If so, can they be, are they accepted in the market? Or is it just something that exists in your head because you believe it is unique? Are the customers accepting it, partners accepting it? How sensible is the plan? Sarah went through with it, and also Oliver, if you remember, he did some simulations on his spreadsheet. How sensitive is your product to the market, price changes, but also, I'll probably come back to that, on if you're dependent on vendors and their pricing. If you're dependent on oil, I know you guys are not, but something similar. You're dependent on a resource you have to pay for. How sensitive are you? Product market fit, has it been tested? If so, by who, how, and when was it tested? The competitive landscape, not competitors, that's too simple. Because a lot of you will say, and probably with some kind of righteousness, that I don't have very many direct competitors because I'm doing something new. I'm doing something different. But you're still competing for the same money out there in the market. The customer doesn't get more money in his budget or her budget just because you have a new product. You have to fight your way into their budget. You have to send them invoices that they will pay in order to get money, real money. So does that work? This is normally a part of your investment deck or a memorandum. If you have that, you probably don't. So it's the investment presentation you've done. That is the basis for the investment, and it's part of that. And it should be available in the data room, but doesn't matter because the investors have them anyway. So that's fine. And this is where we ask the investors to use their own knowledge, their own experience, both as professionals, but also as people, to understand your business, you as a team, use their networks. Do they know anyone that has a specific knowledge about the area that YodaCare is in, or SumTalk is in, or any of the others are in? This is where you use it. And there's also a hell of a lot of free analytics out there. Normally, if a professional company is doing this duty, it's 65, 70 PowerPoint slides, a thick recommendations and disclaimers note. But this is more simple. But still, and they pay for analytics. They could pay analysts to do a deep dive into your technology, your competitive landscape, your competitors, your markets. We don't, but we'll do our best. Assets including IP. Do the assets actually have the value assumed in a balance sheet? I just mentioned it. Or is it something of, it's a fremførbart underskudd, this and some other IP blown up, and no. We ask them to really dive into that, to understand what is it. Is the IP well documented? And if possible, protected? White patents, design patents, white papers, manuals. What is the current state of development? How far have you come? How much invested? How is an MVP or is a clickable demo? What is it? How many lines of code has been coded out of the total that you need to be able to deliver and scale the first customer batch? That's relatively easy to find out. And it's extremely complicated when companies, startups, start to talk about it and make excuses. Don't. If you start to make excuses, then really it sounds like you're not willing to tell. Because the truth is you haven't started the development yet or whatever. tell. And we ask the investors to talk to customers. They will have to have your permission to talk to your customers. They should not do that without your permission. But you should probably not stop them from doing it either. Developers, would you like that? Would you accept that? If maybe they will ask, I would like to have a coffee with one of your key developers. Or outside resources. All necessary contracts to secure the IP for the company, is that okay? That is employee contracts, vendor contracts, consultancy contracts, and everything. And that must be in the data room, always. You cannot allow yourself any glitches there. If there is a problem with only one developer, you have to fix it now. Because when your company starts to look like a success, they will not sign. Then it's too late, or could be too late, and they will ask you for money or ownership as a compensation. Do it now if there is a problem. Must be in a data room. Team. So, who are the key people in the team, and why are they the key people? Are they actually key people, or were they just passing by and as friends when the company was started? Do they have a key role? Being a founder is not a role in a company. Quite often is, most often is, but not always. How are they incentivized and tied to the company? As soon as the investment money comes in, can they just run and copy the company, do something else? Any vital gaps in the team that need to be filled? And again, no teams are complete here. If they are, they shouldn't be here. They should be a different place. Then they come much further. We don't expect a complete team, absolutely not. But we do expect that if there is discrepancies, if there is a hole in the team that need to be filled relatively soon, we want to see a kind of plan. What are the 3 to 5 activities you will do as soon as you have the money to fill that gap? Who will you call to fill that gap? Who are the potential candidates to fill that gap? At least, what are the qualifications you're looking after to fill that gap? Recruitment plan is a part of the overall business plan because it's so important for growth and for scaling. So if you haven't thought about it, start thinking about it, even if you haven't documented your code yet. So that's an important part. And again, any internal agreements existing between staff, founders, mentors, anybody else. I've seen, I've done it myself actually, or been the victim of it in a company. We signed up a mentor in the US, didn't read the agreement well enough, and he had 2.3% anti-dilution ownership. All of a sudden, stupid thing to do. Good for him, not for us. So we want to see those, not because we will judge you and say that we will not invest because you have an agreement with a mentor, but we want to see the agreement and maybe discuss with the mentor. Any incentive plans like bonus plans, option plans, and so forth, not because they're dangerous. They can be dangerous, and we want to know that, if possible, and probably change them, but because we also expect them to be there. There should be room in the cap table, enough free ownership after the investment that new key people can be incentivized in a good way. And also so that the present owners don't lose their ownership in such a way they lose the loyalty or interest or whatever to the company. So that's important too. Turnover, who has left lately and why did they leave?
I'm sorry for asking like another question, but it's just like something that you keep coming across. Maybe some of these questions might be interesting to everyone else. Speaking about the option pools, it's a common knowledge that, the investor tries to buff up the option pool so that they might have like a bigger piece in case the option pool doesn't get distributed and all that stuff. What would you recommend, to the startups when an investor comes over and says, hey, we think that the option pool is like 20 or 15%. Do you have some tips for that? You know what I'm referring to.
It's yes, but we deal with that individually with each company and each group. There could be general recommendations available, but in Angel Challenge we do not make recommendations down to that level. All of a sudden we have a different role then. We look like an investment banker or a broker or something, and we're not. So personally, over a cup of coffee, I could have an opinion, but not as a tutorial lecturer.
So just turn it around and say, for an investment from an angel, perhaps like it's not the right time to decide or to negotiate the option pool. Maybe we should wait then for the to the seed or pre-seed or like.
Quite often, yes.
Because it's a huge discussion, and perhaps it just like.
But as an angel investor, I would look, and as a founder and entrepreneur, I would look at the cap table before and after the angel investment and see that there is sufficient room in the cap table after the investment to provide for both new key people and general options plans in the future.
Okay, but in Norway, just one step ahead. In Norway, you're not allowed to have like treasury shares, if I'm not mistaken. Basically, all of the shares that you issue should be assigned to somebody. So it's not the same thing as the C corporation, where you can, issue 10 million shares, and you have treasury shares, which is, hey, that's our option.
No, you can't do that.
Yeah.
But that's technicalities. It just means that you don't have to be so greedy as an investor. You block future opportunities, and the entrepreneurs should be restricted such that there is room for new owners, option schemes, and others. With the present tax authorities, tax regulations in Norway. Yeah. And again, turnover, who has left? If there has been dramatic or not so dramatic split in the management team or the foundation team or whoever, be prepared to give a quick answer to why that happened. And again, we actually encourage, since this is a do-it-yourself, don't do it by KPMG or PwC, we encourage the investors to use the available tools, including Facebook, Google, and everything. Because also professional investors will use it. So if you're an idiot on Facebook, expect to be confronted with your stupidities on Facebook. Operations. How is the business run on a daily business? Who does what? Who makes decision? Who has the responsibility of the different activities? Power of authority, is it defined at all levels? As an investor, I would absolutely, and it will be in our template for a term sheet and SPA, limitations to the authority of the management, including and especially, of course, the CEO. Because we don't want to see that money is spent on a way that is not to the benefit of the company and the investors. And we have seen that. I'm not seeing it by bad will, by the way, but I've seen it, people negotiating lease contracts for offices, 10-year cheap. Oh no, 10 years. Oof, the investment disappeared there. Things like that. Records of previous decision processes. It's very good if it exists. If it doesn't exist, don't make it up. It's fully okay. Just say, no, we haven't done that. We haven't had any formal processes on decision making in this company. We do it when we have to, and we prefer speed instead of documentation or whatever, but be open about it. Records of owners, board meetings, etc. in place. The formalities has to be there. Owners meetings, it should have said, by the way, not the owners, but owners meetings, generalforsamlinger, stuff like that, and it needs to be there. And also any dependencies, like we said, it's a must in all data rooms. Legal, is there any unusual legal obligations that can affect the operations and also the future success of the company? Isn't that a strange question? No, it isn't. Two-sided happens too often. So again, be open about it, if there is anything. Any exclusivity in any agreements, and any agreements means any agreements. That means vendors that have an exclusivity as a vendor to your company, partners that has exclusivity in time or geography or markets or whatever. And this happens all the time. And maybe you have to give a huge partner exclusivity or a huge customer exclusivity for a certain time in a certain geography. That's not a huge problem. But again, be open about it. Any legal proceedings now or in the present, even if you consider it irrelevant, be open about it. Because if you're not, trust and confidence is lost for a very long time for you and your company. Said this before, haven't we? Risk. Investing is about managing risk. We can't avoid risk. It is there. And for early stage and what we do, angel investing, it's very high risk. So we can minimize risk. No, we can reduce risk by managing it, understanding it, and trying to avoid the stupid mistakes. The mistakes that takes away focus, resources, money, time, all of that, and let you focus on what you have to do to succeed and beat the competition. So it's the technical risk, it's the market risk, it's the team risk, financial, regulatory, political, all of that. We ask the investors to sit back and think about this, not to ask for political reports from consultancies or anything like that. Just think about it. Where are the major risks? And then, finally, other observations. Basically, your gut feeling. Do you really want to do this? After talking to people, after been through the program, been through presentations, had discussions, how are you feeling? And we don't expect people to write down a lot about this, of course, because it's difficult. And it couldn't be hunches, just real feelings and not very concrete. But it is kind of odd comments from you or customers or developers who say that the management doesn't have a clue as to what this company is about or whatever, or the customer says that, yeah, good idea, but they will never finish this product or stuff. Or you feel a strange resistance from you, perhaps. You're not getting the information you want, or you feel there is, yeah. Because you will sit on around the same table for a few years. And if that becomes difficult, probably shouldn't do it. And you shouldn't accept that investor either. So these are things that you would react to if you were in other situations, like, for instance, recruitment or anything. This is a key person I'm going to recruit, but there is something wrong here. I cannot really put it down on a piece of paper, but there is something wrong here. And, well, it's the gut feeling. And it's a market that decides, or the group that decides, and hopefully the decision will be in your favor soon. Thanks.
Yeah, let's 2 questions, okay?